All right, y'all, the government is finally back open, and we got another twist. We still don't know when this economic data is coming, and some of it may never show up. Who knows on that? But the October jobs report, we got another update on that one. Inflation, nobody knows when that one's coming. And the market is tanking because, well, now the Fed has to make this December rate decision with virtually no data. So today we're breaking down exactly what changed from just last night. It all happened so fast. How data blackout evolved. Why Wall Street just had its ugliest single day in a month. We'll cover all of that today. So late last night, if you haven't heard yet, the House passed the spending package and it went off to Trump. Trump signed it, and just like that, the 43-day shutdown, it's officially over with. It's a thing of the past. But the BLS pretty much walked out of the building today and said, yeah, thank you all for your patience. We have no idea when this data is coming. Here's their literal statement on their website. I'll read it to you. We appreciate your patience while we work to get this data out as soon as possible, as it may take time to fully assess the situation and finalize the revised release dates. So now we're in this moment where we wait on the data, which could be a complete surprise to everybody and come out of nowhere any single day now. And then we got a flip-flop from just yesterday, because 1 minute we're not getting October jobs report, and then another minute today, Kevin Hassett, he's the head of the National Economic Council. What he said is completely opposite, because he's saying we are getting the jobs report. That will happen. Even though Carolyn Levitt came out yesterday and made it seem like we wouldn't at all, well, now we will. But the only catch is that we won't get the unemployment rate. That's the first month in 77 years that America doesn't publish that statistic, the unemployment rate. And now the reason why it makes sense, they weren't at work. They couldn't conduct the household survey, so that wasn't done. They don't have that data for October because they weren't at work. It all makes sense. But they do got the payroll survey. So we'll get the jobs created number, but no unemployment rate. And October is when thousands of federal workers who took deferred resignations, that's when they actually vanished from the payrolls data. So this number, it could have got pretty wild, and now we won't get that at all. And with CPI remaining canceled today, we normally would have got that, but the government remained closed. So today, what's today? Thursday, November 13th. Yep, we would have gotten CPI today. We didn't get that. So that's leading a lot of people to begin relying on this alternative data, this web-scraped inflation data. The one that everybody was watching today in the headlines is called Price Stats. And what it revealed is that monthly inflation, this is from like web scraping, so this isn't like official data by any means. It's kind of more like an estimate. There's all types of these out there that exists. But this one seen that inflation slowed. So it still gained 0.16% in October. That's a firm number. Household goods, furniture, electronics, those were on the list of what rose because of tariffs. Food prices were up, but that was offset by transportation prices, which went down. This one was a eye-opener, though, because inflation ex shelter gained 2.7% year over year. And this is why this is a problem, because that's the hottest reading since October 23. So even without the government CPI data, the private sector data is signaling that inflation's a little sticky. It's definitely not handled. And guess what that means, everybody? If you're hoping for some type of rate cut, do you think that's good luck for that or bad luck from the Fed's point of view? Because what we've seen over the day, we've been talking about this on the CME Fed Watch tool. Just yesterday, we were looking at this number and I said, hey, probably over the next, soon, we're going to be drifting down to 50. Well, that happened just today for the final cut of the year. It's pretty much 50-50 at this point. And that's what really set the stage today. Like, people are having this realization, oh, maybe the Fed's not going to cut rates. So that led lit a rough day for markets. Today for the NASDAQ, that was down, what's that, 2.29%. The S&P 500, where are we at on that one? Down 1.66%. The Dow, we're down 1.65%. Bitcoin, this one made a ton of headlines. And remember, a lot of people watch Bitcoin for what's going on. What's it saying about liquidity in this risk-on trade? Well, it's down 2.63%, and it's at a 6-month low. I think they said 22% down from its all-time high. Where were you at? 126 on this, just not too long ago, I believe. Yeah, 126.2. And when Bitcoin's down 20% from its highs, that's considered a bear market for crypto. At least for Bitcoin, and Bitcoin's the main driver of some of the direction these other cryptos go on. Bitcoin's like the safe risk on trade. Like, just think about it, like the original one. I wouldn't necessarily say it's safe. They all could go down. But anyways, what we've seen today in this broader market move is that this was it was a broad issue. It wasn't just tech and AI stocks getting beat up. 9 of the 11 S&P sectors were in the red today. And the main reason is that not only did the market have this realization that the Fed may be done cutting rates this year, because this is their last meeting come December 10th. There's this also realizing that there's this dark side that comes with AI and just how badly that could be. So there's this news report, and let me see if I could find it just real quick. Yeah, there we go. Boom. It shows that there's these big AI developers that private companies, they're training these LLMs, large language models, and they're burning cash and going to continue to burn cash for a very long time. It'll take a while. OpenAI alone expects more than $150 billion in losses. This is the part, to be financed. People willing to just give out money to light it on fire, pretty much. And that leads to this cycle of AI companies burning this cash. It looks good because they take this money, that cash that they're getting lent to buy chips and rent cloud compute. And then these big companies, they make massive revenue off of that. And now investors assume that AI equals this permanent profit engine machine, and it could go on forever. But this is where everybody's having this realization. That's only built on someone willing to take their cash, here, go light this on fire. So if investors ever stopped funding those private AI losses, the entire demand chain we just talked about, that cycle, it completely collapses. And that's the fear that really hit markets today. And also there was some more fears. This one was the next two things we'll talk about. This was labor market fears. So Verizon cut 15,000 jobs, which will happen within the next week. That's 15% of their workforce. Largest layoff in the company's entire history. And then this one is the next piece of news is Starbucks related. 1,000 plus baristas launched an open-ended strike. It started with 65 stores across 42 cities. We could see it expand to 550 stores if no labor deal is reached. So we're seeing this labor market that's really torn up and stressed out. They're slumped over I need a cigarette. And we haven't even got the September or October jobs data yet. So I guess stay tuned for more, because whenever we do, we'll cover it here. So it's looking tough out there. We got inflation coming off oh man, inflation's hot. It might even be sticky in the part where it's been showing sticky. We got a little bit cool in the real estate space inflation wise for just a little bit, and now it's kind of heating back up. And if that's real estate related, it's probably less likely due to tariffs. So some of the tariff induced stuff, that's not even baked into the cake yet. And the labor market slowing. So that sounds like stagflation almost, and a slowing consumer, even though the higher end consumer is doing pretty well. It's just crazy out there. And then today we also got some big news. I wanted to cover this one because the IRS has released their updated 2026 contribution limits. So for 401ks, 401ks, they're now setting the limit at $24,500. That's up $1,000 from just this year. Almost said last year. Years flying by. For IRAs, they're moving up the $7,000 IRA annual contribution limit to $7,500. And then there's these higher catch-up limits for some of the older workers. But this is one of the few bright spots we got. There's more room to invest pre or post-tax dollars. I like that Roth IRA a lot. While these markets are volatile, you might be able to scoop up some deals. So here's the big picture after everything today. We got this government that's finally officially back open. The BLS doesn't know when to expect the data. It could be a complete surprise. The October jobs report, now we're getting it for now until like all of a sudden we're not again. It just will be, it won't fully be complete. And then inflation, we're pretty much relying on these private indicators for now, and they're showing, and this isn't the exact data, but they're showing inflation leaning to the warmer side, away from the Fed's target. And that led markets to drop today because there's all these realizations around, oh, maybe the Fed might not cut. Maybe AI valuations are a little high, and especially like, I need my money right now. Why would I want to light it on fire? And then we got layoffs rising, strikes spreading. And the Fed meets in 3 weeks. So it's almost like we're watching the calendar like, oh my gosh, it's not looking good. And it's just taking forever to get there, and everybody's just not feeling good. So that's what we got, y'all. If September jobs reports on November 19th, if that comes in weak, and we might see the odds of a Fed decision to cut rates, it might go up a little higher if the labor market's showing more weakness. But because the inflation read we looked at, it doesn't seem like it's too hot. Like, it's a firm number, but it's not like 2 out there. So maybe they still pick the labor market to save. But I don't know. We'll just have to keep on watching. December, this is a really uncertain moment for us, the Fed, literally everybody out there. So I'll keep on covering everything going on, y'all. Hope you enjoyed this video. Hope you enjoyed yourself today. I'm about to get out of here, see what else is going on. I'll see y'all next time. Have a good one.